Okay, welcome back. We've got the market, which at least on the indices are not doing very much. But let's focus on the commodity markets. Manisha is standing by with what's top of mind. Manisha, good morning.
Morning, and thank you for that, Prashant. Well, I'm looking at the crude oil prices, which have seen gain of almost 10% over the week. Now we're looking at 3.5% to 4% of a jump up in both the crude varieties overnight. And with that, the crude oil prices are headed for a second weekly gain herein. We are holding around $78, $79 per barrel for the Brent prices at this point in time. Well, there are three major factors which really seem to be supportive of the prices. One is the increasing risks for supply disruptions, and most of it comes in between from Middle East there. Now, Israel is saying that they are looking at a very precise, timely and retaliation against Iran. The Israel Security Cabinet has met and it will be discussing time and response to Iran attacks. I mean, this always comes in as we are heading into the weekend, and you will always see that in last 2 or 3 weeks we have seen buying positions accumulate on every Friday there. The second disruption comes in from Hurricane Milton in Florida, where 3.4 million houses are out of power and almost 25% gas stations are out of gasoline. So there is going to be a lot of demand in this region as and when we see the supplies come back there. That's the second reason that you have seen supporting the prices there. And then it also is about China measures, where there is an expectation that China will unveil draft laws to promote private sector growth. There also is an expectation, there's a time set as well, by the way, for this Saturday, where the Chinese finance minister will do a press briefing laying out the details of all of those policies that the street is awaiting. It is also about the IEA, which says that the supply has continued to decline in the global markets there. Well, the OPEC in any case is cutting supplies, and when you look at the US markets there, from 1.8 million barrels per day of production in December 2023, by the time it was September 2024, it's less than half at 0.7. So the production there as well seems to be declining. So whether it is about war premium, China coming out with more stimulus, or the production that continues to decline, all of these factors are quite supportive. A very interesting report that I was reading from Bernstein overnight, which says that if there is escalation in war in West Asia, then you are looking at the crude oil prices going to $100 a barrel. I mean, that's a scenario that they're not ruling out. But if there is a case that you see much of this tensions come down, then $70 is where they're looking at the crude oil prices. They do not believe that the prices can go to mid-60s or such, which many of the other banks and brokerages, by the way, seem to be talking about. A final chart will tell you on what we've done in sense of prices. So week on week, we are up by 2%. And in last 1 month, the crude oil prices have gained up by 10%, with uncertainties just continuing.
All right, Manisha, thank you very much for that. So that's commodities in focus.